Okay, MedGuide team, welcome back to the channel, guys. Thanks for tuning into today's video. We've got a lot to discuss today, and I'm going to go ahead and zoom up because there's a lot going on the charts. A lot has happened, and a lot is coming up with CPI in the next few days. So we're going to talk about that. Let's go ahead and talk about CPI first, and then we're going to go ahead and get into the charts, into the analysis, and talk about the short term, and talk about the macro and what has changed. Now, before we get into anything, guys, head down to the pinned comment. Click the link to join our Telegram channel, get access to all our updates, analysis, information, and much, much more. I'm going to go ahead and show it on the screen now. And in the meantime, if you do want to support the channel, you can go ahead and sign to Bitget with the link down below, or join our VIP channel where we post daily updates, analysis, trades, and much, much more. In over here, you can see we nearly got 500 members. So let's go ahead and talk about CPI. And CPI, and you can see on the free channel we did post this, we got two things we're looking at. We're looking at the core inflation rate, and we're looking at the year-on-year inflation rate. So this is the year-on-year, and you can see it on the side of the screen over here. We do have CPI coming up pretty soon. It's in a little bit over 2 days. For Australian time, I'm not too sure what time it's going to be, but it's usually around 10 p.m. At night on the 14th of October. So we're keeping an eye out for that, and obviously we see American time over here. The forecasted is 8.1%. The previous was 8.3. If we go ahead and look at core, we can see that the forecast or consensus is around 6.4, 6.5, and the previous was 6.3. So we're looking at a CPI coming in. We're not really too sure what it's going to be. Obviously, we do have the forecast there, but it usually comes in a little bit different than forecast. We don't really get the forecasted number. We usually come in around 0.2% below or 0.2% above. So we'll talk about what that means and how that's going to impact the cryptocurrency market, and more importantly, what we can expect for the price action, how the price action is going to react based on the news, and we'll talk about that later in the video. But let's go ahead and talk about the price action. So Bitcoin has seen a breakdown from that 20-day long rising red wedge. And we talked about we've talked about this wedge a lot on this channel in the last couple of weeks. So we've talked about it basically every other day. This wedge has been uptrending support for about 20 days. And we said, this is a bearish pattern. We at some point expect a breakdown from this pattern, and we're seeing that breakdown. The question is, how low will we go here? Will we form a new diagonal support line? As we do have a lot of long wicks down over here that could potentially develop into support. Or will we retrace completely down towards that horizontal resistance support range at around 18,700, 18,800? Now to answer that, we've got to zoom in. We'll talk about that one in a second, but just go ahead and take a look at the charts. We are still very much within this horizontal pattern. So this horizontal price range, and you can see between this red line and this lower range, this sideways price range, we're still within this range, meaning we don't expect any drastic changes of the macro price predictions or action unless we lose this level here or we break this level here. We turn more larger time frame bullish. We're not talking about bull market. We're definitely not talking about large time frame. We're talking like weekly time frame. We turn weekly bullish when we break over this red line. We turn bearish when we break down below this. Until then, yes, we have this huge range. It's like 8-9% range of massive swings up, massive swings down. But it's by no means a bad thing that we're seeing these pullbacks or these pump ups. There's nothing we need to be too concerned about. I will be concerned for a move back to 17,600 if the price loses 18,400, represented by that red line. If the red line is broken, I expect that move to continue to take us to that new low. We'll talk about that one later. On the flip side, if the price moves up and breaks through this red line, we expect a push into this next resistance range. And if we break through that resistance range, we expect a rally upwards 22,000, 23,000 even. Okay, so we've defined that larger time frame. Let's go ahead and take a look what's happening in the short time frame. So obviously we're broken down from this range, this uptrending support, and we've found a temporary support over here. We've got this diagonal line that we extend across. You can see we've had a few retests on this point. And like I said this entire time, this rising channel is a very messy rising channel. We've got a lot going on in the market over here. Not only are we at massive support in the sense that we're right above that $19,000 support range, which is a huge, huge support level. But you know, we're coming up to the end of October. We're coming up to CPI. Oh, sorry, we're coming up to CPI. We're just entered October. There's a lot going on in the market. There's a lot of uncertainty, and we're getting really, really close to that absolute bottom. And the closer we get to absolute bottom, the more uncertain the price is going to become, whether we're going to bottom out, whether we're going to keep going lower. There's more uncertainty represented in the market, and that is represented by the price action. We're seeing that in the price action. But what we are developing here in the short time frame is a descending channel. And this descending channel here in the short time frame could result in a bullish reversal of the price action. It's definitely something to keep in mind. I think taking a long around this level here wouldn't be a bad idea. Very small capital, putting a stop loss below this horizontal, targeting green line, targeting red line. Not a terrible idea. I would be very cautious of it, but I'd be looking for something like that personally. I might even take a small long over here, just putting that stop loss below and those targets up over here. It is a reversal pattern after all. We do have a potential reversal pattern playing out over here. Obviously, we have some degree of bullish divergence on RSI. We have rising RSI. As you can see, it is slightly rising across this wedge formation, and we do have this downward sloping trend line on the price action representing some degree of bullish divergence. Not a strong divergence, but a divergence nonetheless. So what happens if we go lower? Well, we do expect that price range, which is about 18,700, 18,800, to act as some degree of support. It is a weak support zone. We've seen it act as support prior to the current price action, but we've never seen it respected very, very well. We usually push into it, we fluctuate around it. Maybe we push below it for a second, we push below it for a few candles, we push back up, we're up and down, but generally we find this base level of support around that level. So this is a very important level to hold. As we've said, if we do lose this level here, we do expect a move downwards. And if we lose this level here, which has been respected much, much better, we do push even lower. So at the moment, we are sitting between, if we go ahead and eliminate our diagonal lines, we are sitting between a horizontal support range, which is this range over here, 18,800, and the next horizontal major rejection point, which is 19,800. So we're sitting between these two horizontal levels, and the risk return on the upside is greater than the downside currently. In terms of structural price action, we are looking slightly more bearish and bullish. Obviously, we're broken down from a major 20-day uptrending support line. We do have that bearish momentum. It is not looking favorable. We have CPI coming out, which could throw an absolute spanner in the works. And we keep saying this. Said it before. Doesn't matter what the price action is looking like, guys. When economic news comes in and shakes up the market, it doesn't matter what it looks like. It could completely change the direction of the price action. It's very important knowing that, because volatility can be a very good thing for trading, but if you're in a bad position, it can destroy your profits. So you have to be very much aware that leading up to CPI, you shouldn't be taking big positions. You shouldn't be taking positions that you intend to hold throughout and after CPI. Your positions that you're taking now should be either closed out or your risk on those positions managed, meaning that you either scale out profits if you're a profit, you tighten up your stop losses, or you place stop losses. If you're trading on cross margin, you get those trades closed before CPI comes out. If you're on a leverage position that's on cross and CPI comes out and it pumps or dumps in the opposite direction of your price, you can get destroyed. So be very, very careful. So let's go ahead and take a look at the macro. And again, when we zoom out to a larger time frame, it doesn't look as bad because we're still technically above that major 19,000 to 17,600 support zone, which is represented by the gray box. And of course, that gray box is represented by that support and resistance area we found in 2017 all-time high, as well as that initial block of support and resistance we found in December 2020, late November 2020. So we do have this major support zone that we do want to hold. And of course, holding the support zone is crucial to holding the absolute low, which is absolutely crucial for us to not crash down to $12,000, $13,000. As you already know, if we do lose this level here, we don't have a lot of support below us. We have a little bit of support around 16,000 and 16,500, a little bit. Below that, we have almost nothing stopping us at $12,000, $13,000. So it's very important we hold this level here. And if you go ahead and look at the chart, you can see there's two green lines. And we're coming up to the most important time for price action. We've been warning you guys for the last 4 weeks now that the 12th to the 21st of October is going to be very telling, in the sense that not only do we have CPI lodged in between there, but we have our diagonal trend line, which is our larger time frame diagonal resistance, the resistance that we retested numerous times within this bear market, coming to the point of which it is crossing over our major horizontal support range at 19,000 and 17,600, meaning that between these two dates, we will see a break below that absolute bottom or a confirmation that we're pushing higher. Very important, guys. Very, very important. So let's move on. And you're gonna have to forgive my voice, guys. I'm still a little bit sick, so I'm finding it a little bit hard to speak. But Bitcoin dominance is still pushing into that range. It's still sitting in a range, which is good. We'd like to see it push higher. It's still in a pretty healthy range over here. We're not going to try and analyze it too much, but ideally we would like to see a push above this diagonal trending resistance. Brave New Coin and Liquidx, we kind of talked about that one already. Now DXY is pumping pretty high over here and it's in this rising channel again. Not too important at the moment to analyze it. I don't really care too much because, again, the CPI can throw a spanner in the works and completely alter the price direction or extend the price direction in either direction within a matter of minutes, essentially. So I'm not too concerned about doing an analysis here. If we had to look at it from a standard TA point of view, we are in a rising channel. We will expect this to break down. We already know that when the DXY breaks down, the US dollar loses strength, money flows back into risk assets, cryptocurrency prices rise. So we're waiting to see what happens there. Total cryptocurrency market cap, once again, is the only chart that scares me because we are in this macro descending triangle. And of course, we already know if we lose this descending triangle support, which will be over here at 80 or 850 billion, we will create a new low and head down. I don't know how low. It's going to head down pretty low, guys. We can potentially head down to about 600 billion, even potentially even lower. We might come down again to retest 760 billion, and worst case scenario, head down to 400 billion. Altcoins at that point will be absolutely destroyed if that occurs. I don't think it's going to happen, but it is a possibility. So ideally, I would like to see the price at least remain above 850 billion. I think that's a very important level to hold above. So let's quickly talk about CPI and the impact CPI will have on the cryptocurrency market based on the numbers we get. So we talked about CPI a little bit at the start of the video and we showed you guys what we expect CPI to be. I'm going to go ahead and bring up the charts again and now. We have CPI over here for core inflation and hopefully you can see everything over here. But for September, the previous was 6.3. So in August, we had 6.3% and the consensus for this month is 6.5. And the forecasted is 6.4. If we go ahead and take a look at the year on year, which is more important at the moment, we're looking at a forecast of 8.1, the previous of 8.3. So anything that is at forecast or above forecasted is going to have a bearish result in the market. Anything below forecasted is going to have a bullish result in the market. I'm going to explain why that is generally the case. And this is important to understand. Although that is theoretically the scenario, the case, it doesn't always play out like that, okay? So let's take a look. CPI, what does CPI tell us? It's very important to understand that the CPI number doesn't actually change the risk in the market. And the risk in the market is what changes the return on investments and the likelihood people take loans and invest in assets and buy assets and hold assets, okay? So it's very important to understand. What does actually change that risk? And that risk is defined as systematic risk. What changes that risk is interest rates. Interest rates have a direct impact on everything else. It has a direct impact on the strength of the dollar. It has a direct impact on how much money people are investing in assets. It has a direct impact on asset prices as a whole. And you can see this flow chart over here. We have two sections. We have section number one, which I'm going to go ahead and delete some of these arrows already, which is a correlation between interest rates and inflation. So it shows you that inflation impacts interest rates and interest rates only. And interest rates impact everything else, okay? So what does CPI tell us? Well, CPI tells us what inflation is, okay? So CPI as a whole, the number doesn't actually directly affect the economic situation. It doesn't actually directly impact asset prices. It will shake up asset prices, and why CPI has an impact on asset prices, we'll talk about in a second. But what it does, it tells us the probability of future interest rate hikes. And it's future interest rate hikes and interest rate hikes in general that does impact the situation, that does impact financial markets, which impacts your investments, impacts the prices of risk assets and cryptocurrency. So Here's the thing. When CPI comes in worse, if it comes in higher, if it comes in a forecasted or higher, what it tells us is, it tells us that the interest rate hikes aren't effective at bringing down the inflation. So the point of interest rate hikes are to reduce inflation, which tells us there's a higher probability that when they have the next FOMC meeting, they bring the interest rate hikes up, it's going to be higher than expected, or it's going to be a higher interest rate hike, or they're going to have to continue interest rates hike for an extended period of time longer than anticipated. And what that does tell us, it tells us that there can be a negative or extended negative effect on the market. Now, people know that, they know that connection. And therefore, if CPI comes in high, what would actually impact the market occurs. We see a bearish result in the market. We see the markets drop. We see the DXY pump, okay? Vice versa. If inflation comes in lower than anticipated, we know that interest rates are working. We don't expect there to be a massively high interest rate hike next quarter, next time it happens. There's a higher probability that the interest rate hike is going to be weaker or lower. And that's something to talk about as well, because that still increases the risk in the market. But what the market moves on is perceived systematic risk. So as long as it's perceived to be more bullish, perceived to be better, it's going to have a positive reaction, initial reaction. We're not talking about extended reaction, we're talking about initial reaction. So that is what we're looking for. If we see CPI better, DXY will drop, and so prices will rise temporarily. See DXY, if we see CPI worse, DXY will pump, and so prices will fall temporarily, okay? And the reason I say temporarily is because no matter what happens with the CPI, interest rates are going to rise. Okay, very important to understand. No matter what happens with CPI, interest rates are going to rise. Whether they're going to rise by 0.25 or 0.5 or 1 or 7.5, doesn't matter. No matter what happens with CPI, interest rates will hike. It's very important to understand that. And we talked a lot about this, guys, in the last video, in an hour-long video I did with Rules of Crypto. I talked all about this. I don't want to go into too much detail about it today. I went into a lot of detail, about 20 minutes about it the other day. But it's important to understand how financial markets move. And it's important to understand that we don't necessarily need to see interest rates reverse to have the market reverse. All we need to see is a reduction in interest rates and the expectation that future reductions will occur, and we have topped out on the amount that we're increasing interest rates. And therefore the risk in the market shifts to more favorable, the risk return is better, companies start taking on debt again, prices start going up. It's very important to understand that. Anyway, I'm gonna leave it there. Go ahead and watch this video here. This video over here, go ahead and watch it if you want a more comprehensive macro standpoint of the market. I will talk a little bit more about CPI in a little bit, but if you want an understanding of how inflation rates work, how interest rates impact the market, and how actually the market moves based on interest rates, more specifically, watch that video. It's all there. Otherwise, guys, I hope today's video has been beneficial. Obviously, the short term's a little choppy. My best advice right now is to stay calm. Don't play around with too much money yet. Wait for CPI to pass, see the impact, see the effects, and then act. The biggest mistake an amateur trader can make is thinking he needs to invest and trade every day. It is not the case. Take a day off if you need it. Take a break. You don't have to be trading 100 trades every day. Maybe trade 2 or 3 trades, okay? Sometimes volatility is good, sometimes volatility is bad. Volatility like this, economic news, is not always the best time to be trading if you are new to investing, because there is a lot of volatility. It will move up and down, up and down, up and down before making a decision. That being said, guys, I'll catch you guys in tomorrow's video. Cheers. So we're going to quickly have a discussion about Bitget. Now, if you follow the channel, if you're on our Telegram, if you're on our Twitter, if you like the content, enjoy the videos, and just find what we do informative and beneficial, go ahead and support the channel by clicking the sign up link to Bitget and trade where I trade. Now, there's about 10 different good reasons why I'm suggesting Bitget, and obviously I've made the swap from Binance to Bitget close to a year ago now. Last year in September, I decided to go to Bitget and trade on Bitget, and I'm going to go through the reasons why you should actually come over and trade on Bitget too. So first and foremost, guys, if you like spot trading, obviously 0% trading fees on spot. They've got over 260 coins here. Basically every popular coin you can think of is on Bitget. Basically all the coins on Binance you can find on Bitget. Another really good thing is it is global access, meaning there's no global restriction on who can sign up. Doesn't matter what country you're in, where you're from, you can sign up to Bitget. And the reason they can do that is because they do no KYC. KYCing on this exchange is completely optional. If you want to trade on a decentralized exchange where you don't have to sign up, you don't have to have your government information in there, this is where you want to be, completely decentralized. Another really good thing is they obviously have very low trading fees for futures. It's around 0.02%. Now they have around 60 to 70 different trading pairs on futures and are adding more every couple of weeks, so it is steadily growing. They also have a security fund, so if the exchange ever gets hacked or you get hacked, you can actually request a refund or a compensation from the exchange. They have, I think it's like $80 million, or if not more, $800 million or something close to that in the security fund that actually pay out to their users if anything catastrophic happens. So obviously signing up the link, you'll get access to all of that, but there's a few beneficial and extra things you get access to if you sign up the link down below. You'll get access to the reward center. Now on the reward center is about 5 separate tasks, and they're trading tasks. If you complete those tasks, you can make up to $4,163 just from actually trading. And the second thing is, if you sign up with the partner link down below, you are actually registered underneath my partner account. And what that gives me availability to do is I can actually adjust your fee kickbacks depending on your trading volume. So you actually get paid to trade on Bitget. You'll get kickbacks based on the trading fees you use. For example, on the 3rd of October to the 10th of October, we are doing a running campaign where 10% of the fees you pay on Bitget, you actually receive as compensation as USDT directly to your account. These are some of the things I can do. I can assess your trades, I can monitor your trades if you need advice, I can actually see what is going on, and obviously the fees are very, very small on Bitget. That being said, guys, that is all I want to talk about Bitget. If you want a more in-depth analysis and video about Bitget or how to leverage trade, go to our channel and click the video how to trade on leverage, and we talk you through Bitget in a little bit more. Thanks guys, we'll see you later. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.